Good afternoon, everybody, and welcome to Unfiltered Finance. I'm your host, Ron Geffner. I started my career at the SEC and have spent the last 30 years representing hedge funds, private equity funds, and venture capital funds, amongst many other people in the asset management industry. I know how the industry works. It's about time each and every one of you understand how the financial industry works as well. I'd like to welcome today, in no particular order, my guests, Nat, Pacey, and Sam. Welcome to the podcast, guys.
Thank you for having us.
It is my pleasure. So first, let the audience know, tell us about yourselves, what you are doing, and how you got to where you are. That might help in whatever way, shape, or format you want.
Me and Samuel had initially started out, and we were running, I guess, what you would commonly consider a family office. And we had some investments in some really interesting things. I mean, we were invested, obviously, in public equities. We were invested in private companies, a tiny bit of real estate, and then some really unusual things too. And then eventually Samuel said, we should get involved in this crypto thing. And initially I was very against that. I was approach it a little bit conservatively. But that was a conversation that me and Samuel had revisited numerous times. And I'm very happy that Samuel won out in that discussion or argument there, because obviously we're heavily involved in crypto now. We've developed a strategy that does very well to the point now that we're looking into launching a fund. And that's how we met you, actually, Ron. But that's sort of our very early beginnings. And then later on, Nat came to join us as well. And I think we all get along and do very well together. I think we all play off each other's strengths and weaknesses.
Yeah, and that's, I guess, where expertise rely on my network and experience that Sam and Pacey might not have. We're all pretty young. I'm a little older than these two, a little more experienced. So that's what I brought to the table. And that's how we kind of kick things off.
And to second Pacey on what he said, when it came to our beginnings and how those things came about, I was always in the markets. I started quite young. By 17 and a half, I had gotten into the markets, and I started in equities. I was buying stocks and then just trading options. And as I got deeper into it all, I rediscovered crypto around December 2020 when I saw Bitcoin break 20,000 for the first time since 2017. And that kind of shifted my attention from public equities to crypto. Within the few months that followed there, I saw myself build more strength within that market, specifically trading crypto futures and then just crypto as a whole. The market being 24/7, more volatile, risk on at certain times, risk off when it came to specific headlines, made me more attracted to it. By the time I partnered with Pacey, all of what he said became more of what we worked on, and I was still doing crypto on my own. And I was starting to get the question in some of the circles that I was in that, hey, could you manage a little bit of my money? And I was like, yeah, I just maybe need to set up a few more things. So Pacey and I worked on it while I was trying to convince him, hey, let's do this. And we got the structures up and running and formalized things more and more every single year, built better systems every single year. I got better throughout market cycles to the point where I'm a lot more comfortable where I'm at today in my understanding of the markets, which, Ron, I look forward to talking about all that with you shortly. But as a whole, every single year we've formalized things a little bit more up to now, exactly what we said before, setting up a fund with you, Ron, with a lot more formal systems and entry for investors.
So one of the things I'm thinking is, given your age, which in my mind is a good thing, try and speak to your peers to give insight maybe as to how you got to where you are. And if somebody wants to follow in your footsteps, what you might recommend that they do.
Yeah, great question. And I want to preface that question by stating, in a sense, I was lucky. I was one of the lucky few with the way that I dealt with the pandemic. I had a lot more time on my hands than a lot of other people did. Although I was still going through school, I had just finished high school at the time. I realized that the time I had during then, I guided it all to markets. It was a perfect conjunction of the way I got into markets and when, and the amount of time I had to study them. I don't think today, if those circumstances were to repeat and there was no pandemic, I would have the same amount of time and the little responsibilities that I had back then to do so. In the case that people want to get into markets and want to learn more specifically about crypto, what I experienced, and a lot of my knowledge today is very based off my experience. I value experience a lot. I realize a lot of what I know is due to what I lived. I think people should just throw themselves in it. You need to live the markets to really understand it. You need to be there for the days that things get so chaotic, everyone has no clue what to do, and still have order on those days and remember what those are. One of the strengths where maybe I'll bring this up a bit later, and Nat has always seen me do this, but I could just tell you days in the market that I've lived on a whim where I'll tell you the day. I remember every single one of them, hour to hour, what I did, what positions I was in. And those days are the days where a lot of other people, if there was volatility, they got eked out of that. I was there. I loved those types of days. And I'll never forget those days because those are the days where I learned the most. Experience is really the best teacher. And if I were to give that answer to someone today, it would be just throw yourself in the market, live those things, live the days that will form you into a real trader, a real investor. And the technical side of things for sure comes into play, which we can go into afterwards. But it's to live it is my best advice.
And to touch on that, I think that, I mean, it sounds cliche, but consistency compounds. And especially at times where you feel like things aren't always going your way, or that, have a bad day or two or three or week or month, but it's showing up in those times where that compounds and then eventually gets you to where you need to go.
And so obviously you seem to be, I'll use the word bullish, if I may. It may not necessarily be an accurate term, but why invest in crypto now?
Actually, I think we still have a little bit more to go this year. I'll touch on a bit on how I do understand cycles quite well. So the end of the cycle was something that I was able to capture pretty well. Pacey was there for it. Everyone saw things play out. I still think crypto has a bit more down to experience this year. At the same time, doing any of this and the way that we're doing it, I have to be bullish on the industry as a whole. I think crypto will go somewhere. I think the implementation of blockchain and just building currencies was a big touch point over the last maybe decade and a half that brought people to crypto. I don't think that that's the final implementation of it all. The same way that I can touch on something that's a bit smaller, which is NFTs, which saw a massive boom late 2021 and today is quite irrelevant. I don't think that the implementation of NFTs being pictures on a blockchain is the final implementation of what NFTs can do for the world. I think the immutability of blockchain, how it's organized, all those touch points are things that are incredibly powerful and can change the systems that we have today. And I think that's even understated. I think the people that are working on it, the teams are going to get tenfold bigger. I think the investment that's going to be made in those teams and those projects will grow even more than tenfold, and the market will grow alongside it. But as of today, I could still stand a little bit against that. I could still be critical of my own industry. I could still bet against some people that I know, so to say. And that's my present point. But if it's to carry the future of crypto, I'm very bullish in that sense on decades of it.
Just for the purpose of the audience staying on top of this, when Sam refers to the term immutable, it means that the blockchain, this electronic ledger, cannot be altered or manipulated by third parties. Sorry, Nat, I didn't mean to cut you off.
Yeah, no, not at all. My answer is going to be a lot simpler and shorter than Sam's. He went a little more technical, but to answer your question in simple terms for people who just want to know why they should invest in crypto, especially younger people. If you're a certain age in your 20s, 30s, then you could afford to take the risk. Early adopters are always rewarded. And I think doing your due diligence and researching Bitcoin to truly understand it, anyone that I know that has researched Bitcoin and understands it has this type of undeniable faith. I know a lot of people who save every dollar they have and put it into Bitcoin, nothing else, because of their conviction in it. So I feel like it's one of those things that you just start to explore, watch a podcast or two, and then you fall down this rabbit hole. And when you truly understand it, that's when it becomes a no-brainer to at least allocate a portion of your portfolio, no matter how big or small, and discover what this thing is.
My understanding is that Wall Street has created synthetic instruments to give people exposure to Bitcoin, and that it has or may have an effect on the value of Bitcoin. Any thoughts there?
Yeah. One thing we can bring up in recent times was on February 5th and the days leading to that, there was a pretty big price correction on Bitcoin. We saw some forensics that was sent over to us by someone we had met shortly before. The understanding of that drawdown was a big unwinding from an Asian firm through IBIT, which is BlackRock's Bitcoin fund. The challenge of that, to answer your question, Ron, is those ETFs that are by these investment banks, say BlackRock, which is the biggest one, does challenge a little bit the amount of Bitcoin that technically exists. Okay, is there paper Bitcoin there? The general understanding is that there will be max 21 million Bitcoin to ever exist. And those ETFs, the managers genuinely do buy Bitcoin or sell it if needed to balance out those books for clients. But a big unwind like that led massive inflows into exchanges, which were directly sold at spot, which led a massive move down from roughly the 90,000 area to just sub 60K within a matter of a week. This was pretty big. So it does challenge sometimes the stability of it relative to the stability of some traditional finance firms. But then we look at the stability of Bitcoin's supply, and a grand majority of it has not moved at all in close to a decade. And that will only increase in our times.
And are you pessimistic or bullish on other cryptocurrencies outside of Bitcoin that you're willing to share your thesis on?
Yeah. I won't point out any names. I think a lot of people also if they look at Bitcoin as gold, they look at Ethereum as silver. There's a lot of things we can say about Ethereum and its potential future. I don't know so much of what I can say regarding that, but I'd love to see it succeed. There's also a lot of other layer ones that have shown better transaction throughput, cheaper transactions, etc. But I feel like everything's kind of caught up by now. I think this is said by a lot of people. Sometimes people don't even consider Bitcoin as a crypto. I think Bitcoin is completely separate than what other crypto is, just because of the way that it exists, the way that it was formed, the way that the supply issuance works. Bitcoin is commonly referred to nowadays as more of a commodity instead of a crypto. And I like to say that Bitcoin is not crypto, which is a slightly contrarian thing to say, but everything else is honestly something that I've paid a lot less attention to fundamentally, but still on a technical perspective. I love to trade those coins. I love the volatility of them in certain times. A lot of them that genuinely don't have any value, which is the majority of them. When the market takes a hit, they take the biggest hit, and it's fun. It's quite fun to trade that.
So it's a concept of flight to quality, right? That happens in the securities markets as well. So to that end, do you see the trends within crypto mimicking the trends within the broader securities markets? And is that a good thing or a bad thing?
Good thing only because it then brings a bit more legitimacy to how crypto cycles operate. In the past, we've seen crazy boom and busts in crypto, and we will continue to see them just with dampening volatility every cycle. Nat has experienced them in his time investing even before we had met, and the boom and busts will never go away. Nat can make his comments on that. But yeah, he's observed there too.
Pacey's a very thoughtful person who likes to listen to the data.
I do think Samuel is correct, and I think for the most part, crypto is sort of treated unfairly. You know, the stock exchange has been around since the time of Vanderbilt, so the 1800s, and informally even longer than that. Crypto has been around for what?
16 years.
16 years, 2008.
So around
For 18 years, maybe. 18 years, I would call it as a happy medium.
18 years. So I think it's really unfair to give crypto any definition or give it any definitive thought based on what it has done in its first 15, 20 years. Because if you were to go back in time to the first days of the stock exchange and you saw what went on there and all the manipulation, you would be like, oh my God, we got to shut this down, right?
Of course. I mean, that's the very reason the SEC exists.
Exactly.
And I think, the SEC is very much so adapting to be able to, I don't want to use the word control because I think we can open a can of worms very easily there, but to regulate crypto. And whether the SEC is the best organization to do that or not, I don't know. But I think we do have to have some regulation. And I think regulation does help stabilize the crypto market as a whole eventually.
Yeah, well, people, based on my experience, we all want to know what the rules of operational engagement are. And the problem was when crypto came out early days, the rules of engagement were being figured out. You had people from the traditional finance world that are called TradFi versus the crypto natives who most did not have traditional asset management experience and really did not have an appreciation for why rules and regulations exist other than to even the playing field to protect in a paternalistic way people who invest in the marketplace, the retail segment in particular.
Yeah,
so
exactly.
So I mean, I agree with you in the sense that once regulations become more and more clear and stable, I want to say to some greater degree, whether they're good or bad, obviously there's exceptions on either end of that spectrum. It will benefit the crypto community. But I mean, yeah, but
regulation
but crypto, if we look at it from a global perspective, right, with what's gone on with the war with Iran and what appears to be a single user accessing multiple wallets and other control concerns in connection with anti-money laundering and terrorism, it's the new kid on the block. It's still early days. So I'm in agreement with you guys on all of those issues. Casey, it looks like you're eager to say something, so I want to provide.
Well, I mean, you just mentioned regulation is good for the crypto community, and I think it sort of depends on which end of the community you're looking at. I know a lot of people who are very much so libertarian, and to them, having crypto regulated by a government or a government agency is like walking on a bed of coals. But I think for people like us who are more involved in it, I'm going to say in sort of almost institutionalizing it, it helps broaden the community and make the community larger as a whole. And in that respect, I do think it's good for the average person within the community and the average person trying to institutionalize it and, bring it to the open market for everyone to be able to access.
Well, think about it this way. If there's fewer participants in the crypto market, theoretically, it reduces the liquidity of the asset class. It reduces the quality of the information. But by providing what the rules of engagement are, you attract traditional assets, institutional assets, which adds to liquidity, which means there are more people, greater familiarity, and it increases the likelihood that the industry stays if we look at crypto as an asset class. So in that regard, it's good. If it gets over-regulated, right? It's like Snow White. Oh, this bed's too hard, this bed's too soft, this bed's just right. Right? We make our own bed, we sleep in it. We need to have rules of engagement that are sort of in the center.
Yeah, I agree.
Yeah.
That's definitely a concern for me because I'm a bit of a libertarian myself, is that it'll become regulated to the point where people will have trouble accessing it.
See, and I would think there were certain apps that were just recently approved by the SEC with regard to the trading of crypto off of certain platforms. The more provided regulation doesn't go overboard, and it doesn't necessarily appear to be going overboard right now, And the greater you see, like all the institutional support that's come on the last 5 years, I would venture to guess that crypto's here to stay now. And crypto and blockchain are two different things, which we all know about as well. So what then keeps you guys, what concerns you about the marketplace outside of regulation? I mean, is it quantum? Do you think quantum computing's high likelihood of being developed and then it affects the immutability of the blockchain?
Yeah.
And I see Sam shaking his head no.
Yeah, so we speak about this quite often. So,
well, you had brought it up last time we had spoken, and in that time there was real development in solving that issue. Bitcoin, there was a paper that was published by, I have marked here, Avihu Mordechai Levy, but it was April 9th, like literally last week. He had solved the whole quantum issue without creating a soft fork of Bitcoin at all. They didn't need to change anything, make a network upgrade. And it's funny because once you actually looked into it all, for some odd reason, it seems like Satoshi made Bitcoin quantum proof already in 2008, 2009. It's impressive. Bitcoin, the way that people were looking at it is current, not particularly stable, but current development of quantum computers have them at about 6,000 qubits. They were like, okay, at 10,000 qubits, it can break SHA-256, which is Bitcoin's encryption. And people were like, okay, it gets closer to 10,000, we'll break it. And then there's no more Bitcoin. But that seems to have been fully mitigated by now, or at least for now. I still think we will see some sort of market scare. The way that people are labeling that is Q Day, which is Quantum Day, however that ends up being. And I think that'll be a sort of a day that is equivalent to March 12th, 2020, which is when the pandemic hit and Bitcoin had collapsed to 3,500 before embarking to its journey to 65,000. I think a day like that will occur over the next 5 years, and I look forward for something like that.
And now what about AI? So there was an article I was reading about how one of the companies is holding off this newest iteration of the program, which writes code itself, because the concern was it can hack a lot of the security protocols that exist in the financial markets.
So Anthropic had the other week Mythos, which is one of their new flagships model trained on Blackwell NVIDIA GPUs. It's a peak of what we could get right now. And I respect a lot the initiative that they put out before making Mythos public, which is now known as Project Glasswing. They are working with all the big tech companies to make sure that if Mythos goes out to the world, it doesn't exploit it. Well, first of all, it doesn't end up in the hands of the wrong people, and it doesn't exploit a lot of zero-day bugs or any code issues that could be found. You have to imagine there are code bases out there that are used by people every single day in some of the biggest companies. The week before that announcement was made, there was a massive hack in a dependency that is downloaded over 100 million times a week called Axios. A few days later, some pretty big breaches happened. A company called Mercor got breached for all their data, some other technical issues. Whether those things were related or not, I'm not trying to argue that. The point is, I respect Anthropic and some of these labs working with these companies closely to make sure that if those models go out, they don't cause any of these massive issues. There are a lot of doom and gloomers that will say it's the end of the world. But in 2019, when GPT-2 had just come out, people were worried about GPT-2 being the same thing. And that was GPT-2. So imagine where we're at right now. The all-in-all answer I can give, I'm pretty bullish and very optimistic in the way that AI will affect the world. I think that a model like Mythos that can identify such issues makes the world a better place regardless. It just has to be used in a smart way. And the initiative that Anthropic put up, which gives these companies $100 million in credits for token usage to review their code bases and fix anything, is a great thing. And they had reached out to another company with a pretty important software with a patch. And that company had responded to a user who asked, how did you guys not catch this? And how was like the bug fixed? And they said that when they got the patch, the code looked human written. So it's that good. And it begs another question when it comes to the entire software landscape, where it seems that I don't think software engineering is going to be replaced. I just think it's going to be to some extent, a less prestigious job, but more accessible to more people because now, and it brings me back to another thing that I remember Jensen Huang saying, but the coding language of the future is no longer understanding these languages down to where you're going to put a semicolon or a parentheses, right? It's going to be talking English to the computer and the computer does the code. And I find that a beautiful thing. And I find that software engineering will be even broader, even more powerful, and building software, the cost of building software will be a lot lower. And I mean, software runs the world. We need all that.
Yeah, well, it's like the universal translator from Star Trek. You're taking somebody who speaks one language and converting it into a different language and having it spit back to you. I got a smile from Pacey, at least on that one. Do you guys see any correlation between the prediction markets and what's going on there with crypto?
Yeah, actually, I'd like to throw that question back at you when it comes to prediction markets, because as a former SEC, you were there, you saw how those things sometimes get regulated. Do you not think those things will get cracked down on with the amount of insider trading we observe on those markets?
Well, they are being cracked down upon. It's both the CFTC and the SEC, the securities markets and the commodity markets have rules that prohibit insider trading. And there's been some accountability, not as much as I would think yet, but
Correct.
that could be fairly said about any industry as well, whether it's crypto securities or commodities or real estate. There's always going to be more bad actors than people that are prosecuted for being bad actors. It's just a function of the world.
I'm only putting that up, and I think it's a great question that you put up, just because it is an intersection of what we observe markets being, how they organize themselves, and crypto. So prediction markets are putting these random bets of, will this happen today? Will it not happen? And you put yes or no, and you get a payout. And it's all done through crypto wallets. So the addresses of the people that are making certain bets, which seem sometimes off. It seems weird for them to put that much money on something that seems uncertain, and yet they end up being correct. So these are the types of things that also challenge the anonymity of crypto. And to your guys' point earlier, when you guys were talking about the regulation of crypto, there's a part you'll never be able to regulate. They will never be able to change the way Monero or Zcash work, the fact that they have private ledgers. That'll never change. And if people want to use those for God knows what, they will use it. Bitcoin's no longer that worry, because if I want to tag Ron your Bitcoin address, I know which Bitcoin address is yours and I can see your transactions. I can't do the same on Monero or Zcash. So that privacy layer is something you can't regulate ever.
So if you guys have to predict where you think the world of the cryptocurrency is going, what prediction would you make about the crypto industry?
I think the market will grow tremendously. I think the involvement from TradFi will grow even more than what it has over the last 2 years, from having ETFs being listed to more financial products, more access to, I think I saw this morning, Charles Schwab is now allowing direct crypto trading on their platform, similar to Robinhood. These things are just going to become run of the mill. In the other month, we had Interactive Brokers allow crypto stablecoin funding to accounts. And those are just small things. So once that stacks up, the amount of volume that's going to go through crypto, through the protocols, transactions, I think DeFi is something that's really interesting that needs to grow more than what it has today. All these things have such a high ceiling we have yet to reach. And the growth towards that is super attractive. I think we have so much to go for.
Any thoughts to add?
Yeah, I think that, if this past bull market, this last year wasn't an indicator by the amount of institutional investors and ETFs, like these are all ripple effects of a market and industry evolving. A couple of years ago, you had JP Morgan saying that Bitcoin is only used for drug dealers and money launderers. And 2 days ago, they said the technology is here. It's incredible. It's the future. So, you see these narratives shifting from big voices, powers, institutional investors, someone who's crypto native and believes and sees where this is going, even someone on an outside perspective that has no idea. If you just look at the fundamentals, you just look at what people are saying, I think it's very clear that the industry is on its way up and definitely has legs to go for the next 5-10 years.
And then it's not necessarily truly correlated to crypto in my mind. Others might see it that way, but I'm getting a lot of phone calls globally from operating businesses to real world asset sponsors, predominantly real estate, tokenizing the assets. Any thoughts on tokenization in any way, shape, or form? Because I really welcome that.
Yeah,
for sure. I'll touch on the real estate side because you just mentioned it. I think that's an incredible use case. Buying and selling a house and deeds, notaries, like all the paperwork and everything that needs to happen to transfer that ownership is insane when you can just literally transfer the token and you now own possession of this property. So I feel like,
by the way, there is already a company doing that. I interviewed in one of my earlier podcasts, and I feel bad that I don't remember her name, but they put on the blockchain real estate transactions with the intention of lowering the cost. Like I just recently purchased a home, and the closing costs were roughly $50,000. So now if I flip the house, I move 5 years from now, it'll be another 50,000 or more. And if you periodically keep doing it, it increases the cost of the real estate, not necessarily the value of the real estate. So that is happening, but not everything currently can be on chain. So some of the agreements are off the blockchain. So it's not prime time ready in my mind for the average consumer who doesn't understand it. But and sorry to interrupt. I just wanted to interject.
No, definitely.
So what other thoughts on tokenization?
Exactly to your point, just to wrap up the real estate side, I have a few friends who work for some big real estate property management companies, and they see the value, but for a 60-year-old company to change their ways, like on a dime, like the adaption, that's what's going to take some time. All these new companies popping up, younger generation that are at the forefront of this, it's one thing, but you have a lot of these bigger businesses that are going to take some time to really flip that off. So I think that's where the adoption lags, not because the technology isn't ready, but because the business owners or the people need time for that adoption to kind of kick in.
Yeah. And one of the other guests I had on a prior podcast, whose name I do remember, is Duke Kim from Securitize. And Duke's, to summarize what he said, the tokenization of assets right now helps create efficiencies within the operation of a business. But the mistake that people make right now, thinking that tokenization is an easy way to attract assets. And to my knowledge, there's no real solid secondary market where people are buying and exchanging and selling tokenization of real world assets. That will, in my mind, that's only a matter of time, right? If you look back to the ATM, I think, as a metric for technology, the adoption of technology by society keeps decreasing in the time it takes for society to integrate in with a new technology. This seems to be, in my mind, maybe a slight barrier gap to that, but we'll see where that goes. But any other thoughts on the tokenization?
Yeah, if you remember earlier, I brought up NFTs as it was not the way they should have ever been used. To bridge it to that, this is where tokenization of those assets is going. For me to exchange, I want to buy Nat's home, or he wants to buy my home. Hey, sign this blockchain contract where we have the transaction and the NFT itself representing the ownership of the home from my wallet to yours, or vice versa. And that represents real ownership, where you're right, there is no current secondary marketplace for such a thing. But when there is, and they can solve that gap, and they can solve the onboarding gap of an asset that's in the real world, like you said, the cost of the transaction, the cost of real estate, that is something that's probably like $1 billion problem someone can solve out there.
I think it's bigger than $1 billion problem. It's not only cost, it's the timing it takes. Normally, if you buy a home in the United States, it seems that closings will take a couple of weeks. I expect maybe it can be done more quickly. But what was expressed on the prior podcast was it can go into a day or two. The transaction can happen.
That would be incredible.
Yeah, so we will potentially be creating greater efficiency.
I can appreciate the uses for NFTs and tokenizations. I think we'll go through a period here as a society where we're going to be tokenizing things that just don't need to be tokenized. And NFTs and art like that were an example of it. I'm going to equate it here to sort of like the epidemic of smart homes, and we made smart things that really didn't need to be smart. Like, do I really need to turn my toaster on from my phone? No.
I'll use my coffee app from my machine because it's actually easier to do than trying to figure out what button represents what type of drink. Because the screen is smaller there and it's less descriptive than it is on my phone.
And that's a prime example. Does the coffee maker really need so many buttons that you can't figure out which one to push? I don't think we need to tokenize everything. Like, I think some things are going to be tokenized and it's just going to be a huge waste of resources and time. But I do look forward, things like insurance slips, sales contracts, all being turned into NFTs and tokenized and whatnot.
And this will be maybe the final question. So one of the things that goes through my head, I heard this years ago, but why Amazon and other really powerful companies that almost have their own exchange online now, why they haven't created tokens tied to their businesses to really secure their business even further and raise the barrier of entry to other competing businesses. Do you see any companies like that might convert their platform to a token? And is that a good thing, bad thing? Is it something worth investing in possibly? Or am I in a fool's errand with the question itself?
I think it's a mix of answers that Nat had given earlier, that Pacey just gave. Of one, it's not ready. Two, it seems like with the way that crypto has gone over the last 5 years, doing something like that seems quite immature. Then it's also a mix of things that you and I had spoken about, Ron, of the legal, of like what is a security in crypto, right? That's still a question mark that is undefined. And it's a mix of all these things that, as of now, makes it completely unattractive for these businesses to try that. But if it's doable, I would love to see it.
If I was to step into the shoes of someone on the board there at Amazon or the CEO and think from a strategy standpoint, okay, what am I going to spend to tokenize this thing and to create the system for doing that? Is it worth it for me to protect my market share when my market share is, I already have a monopoly? Who's going in to compete with Amazon? There's not too many. And I don't know that they would see the ROI of creating a tokenization system when they already have such a huge market share and they have such a trench around them already.
But don't think about Amazon, the selling things online business. Think about AWS. And that's where, for example, what if they're able to decentralize their data centers better? Does that up security? Does that up the service and the cost that they could give that as to consumers? Where there are things like that today, such as Render is a crypto project where you can render and use a GPU completely decentralized. And you can pay for it in crypto and you can sign it through your wallet. And it's something that some companies explored using for a little bit. I think it'll probably come back up down the line. But that's an example of decentralizing computer processing and doing it in a more secure way, more cost effective. And that doesn't apply to Amazon's selling business. It applies to AWS, which is a huge part of their business and still growing because we need more compute out there and we're far from having enough.
Guys, listen, I really appreciate having you on and hearing your thoughts and sharing them with the audience. And you're taking the time to be here with us today. So thank you very much. Hope to have you on again in the near future. For the audience, thank you again for listening in. I'm your host, Ron Geffner. I look forward to you listening to our podcast on a go-forward basis.